see that from the volatility of the NEV. It's very, very small. But because of the lack of Islamic fixed income options in the U.S., we structured this fund to have some exposure to emerging markets. Now, that may scare you saying emerging markets, but in reality is most of the emerging markets that we invest in tend to be investment grade and high quality. Plus, this is where our credit expertise comes in play to make sure that we're picking the best investment.
Okay, Ihab, let me jump in for a second here and point out our newest asset class offering in the Azzad Wise Capital Fund, which is trade finance. Can you very quickly give us an overview of that?
Yeah, sure. In addition to the alternative investments that we just discussed, like Sukuk and Islamic bank deposits, we also were very happy to announce that we started to invest in trade finance for the Azzad Wise Capital Fund as well. Now, this is socially responsible trade finance deals. We've had experience in trade finance for over 10 years. And now, in conjunction with the International Islamic Trade Finance Corporation, which is an arm of the IDB, the Islamic Development Bank, one of the only few AAA banks out there, we are participating in some of those deals for the purpose. The mission of the bank is really to advance trade and to improve economic conditions and the livelihood of people across the world. The ITFC, as a leader in Islamic trade finance, deploys its expertise and its funds to encourage trade among its member countries. We've begun partnering with the ITFC on trade finance for deals with the Azzad Wise Capital Fund. And this is just another way to increase the diversification within the fund and the fund's holding, and at the same time help foster economic development globally.
Okay. Thank you, Ihab. I want to bring in Mohammed Elmi from Federated's London office on the subject of diversification. Mohammed, are you there? Can you talk a little bit about the Azzad Wise Capital Fund's correlations with other indices?
Sure. Thank you, Jos. If we turn to slide number 15, this slide really shows how the Azzad Wise Capital Fund diverges a bit from various bond indices. Specifically here on this slide, the JP Morgan Emerging Markets Global Bond Index, the Barclays US Aggregate Bond Index, and finally the Bank of America Merrill Lynch 1 to 3 year index. The fund generally shows quite considerable low correlation against conventional fixed income markets. Holding various alternative asset classes like those represented in the fund, the Azzad Wise Capital Fund, we tend to have low correlation to fixed income markets in general, and you want uncorrelated assets during periods of volatility or uncertainty. If we move to slide number 16 now, this next slide really does show you the advantages of owning exposure to alternatives like those in the Azzad Wise Capital Fund from the beginning of May through to August of last year. In the historical context of the stock market, a few months is relatively a brief moment in time, but the most recent period in volatility is one of the first times that alternative strategies have been able to show their worth. Thanks to the efforts to stabilize markets and inflate assets by the Federal Reserve, global markets have had a relatively quiet past several years. And the alternative strategies, including that in the Azzad Wise Capital Fund, were launched during that time. So this period of time has given investors a means of testing their value of alternatives. If we move to slide number 17, this slide really shows you how the fund has held up against both the Barclays US Aggregate Bond Index as well as the JP Morgan Emerging Markets Bond Index.
Okay, thanks, Mohammed. We're going to, at this point, bring it back to Ihab to wrap up the official presentation or slide deck portion of today's webinar before we get to questions and talk a little bit about downside risk for a moment here. Ihab?
Yeah, Josh, this is actually a good way to close this, to focus a little bit on downside risk. Ever since the global financial crisis, investors' priorities have really changed a great deal, mainly from emphasis on investment returns and alpha generation to an emphasis on diversification and downside protection. That's essentially capital preservation. Especially in the case of a steep market down move. Downside risk refers to really an estimation of an investment potential to suffer a decline in value if the market conditions change, or the amount of loss that could be expected or sustained as a result of the decline. This chart on slide 18 shows the specific downside risk of the Azzad Wise Capital Fund as measured against its peers, the bond index peers, both domestically and within emerging markets, in basically roughly over the last 5-year period.
Okay, thank you, Ihab. And I'm sure we're going to have a couple questions at this point, but very quickly, let me jump back in here to show everybody a quick look at the fund's brokerage availability. This list, by the way, is continually updated. We make it, along with fund updates and market commentary, available to financial advisors who sign up for our monthly e-newsletter at azzadfunds.com. We encourage everybody on the call to sign up today. At this point, what we'd like to do is open it up to questions from the audience, and the way we're going to handle that is actually through the chat box on the control panel of GoToWebinar. You should see that, have the ability to open that up and type in a message, send it directly to us if you may, and we will field those. I'm going to take the presenter's prerogative and begin with a question, and it's a toss-up for either Ihab or Mohammed, however you want to take it. Just a general sort of opining, if you will, on growth prospects for the economy in general, both domestically and internationally, what that means for fixed income, kind of looking in the crystal ball, if you will, longer term.
Sure. Maybe I'll make a quick comment, then I'll pass it on to Mohammed as well. Domestically, I think the U.S. is actually doing okay. There's obviously been a little bit of a slowdown that we've seen in the last few months, but overall, the economy is chugging along. You know, jobs are being created. Most of the sectors in the economy outside maybe the energy sector have done fairly well. Now, the risk to the global economy really comes from outside of the U.S., at least in my view, where you've seen a lot of volatility and a lot of downdraft in certain markets, whether it's in countries in Africa that are resource-based, energy-based, places in Latin America, again, where, like Brazil, where you had a lot of volatility based for a number of different reasons, or even in Eastern Europe and Russia and so on, where you've obviously had some geopolitical risks as well. And of course, the big elephant in the room is China. No one really knows how that's going to turn out or how the risk involved with that. So giving all that uncertainty and those factors outside of the U.S., I think you have a tug of war between a U.S. which is fairly stable, but a lot of risks outside of the U.S. which potentially can affect U.S. and U.S. rates. Mohammed, you want to add something to that?
Maybe the international perspective.
Sure. Yeah, just from perhaps maybe the kind of the emerging market flavor to the portfolio. I think, as highlighted in the previous slide, if we look at for example, the average rating, credit rating that we basically invest in, you know, these are very solid, you know, economies with, you know, ample kind of fiscal tools in place. Growth may be faltering, as you have said, outside potentially of the US, but the various countries I think that we mainly invest in are fairly well stocked and are in decent positions to potentially maybe withstand some of these volatilities outside of the US or / developed markets.
Okay. All right, gentlemen, thanks. Follow-up question here. I'm seeing there, obviously, and Ihab evoked this as well, there's been a big drop in commodities, and along with that, bond yields. Some folks are taking that to mean a likelihood of greater growth prospects going forward. Any truth to that? Kind of what's the Federated take on that prognosis?
Okay, well, we kind of swung pretty hard here on the U.S. rates, where at some point not that long ago, 2, 3, 4 interest rate hikes out of the Fed were priced in, to up to maybe a week or two ago, the idea of a Fed hike in the U.S. wasn't priced in at all until year end. Now we're moving back a little bit the other way. I think commodity prices, when they move so much, whether it's energy, metals, anything in that commodity space, when you have such a big move as we experience, it can be destructive to certain parts of the industry, and it is, and has been. But if you look at it in longer term, it's actually, you can look at it as more of a stimulative to the global economy. So in the short term, you're going to have specific players in the industry, and maybe even specific countries, that suffer on the growth side because of this large move you've had. But longer term, the inputs that go into global growth, commodities, oil, energy, if those cost less, it's really more of a long-term stimulative. So short term, a lot of volatility, a lot of uncertainty, and maybe even more pain in some places. But I think longer term, it's stimulative to global growth.
Okay, thanks. Got another one here. It might be a little controversial, I don't know. On the in the wake or the day after Super Tuesday, lots of folks are talking about the possibility, if not the high probability of a Trump versus Clinton presidential race. Any thoughts on who might be better for markets? If there's any inkling one way or the other on that one?
I mean, that's a really big question, and I really don't want to go into like political inclination. But I can tell you, obviously, a Clinton presidency is more of a status quo. So that will be, you could infer from that what you want. It's not too much uncertainty on that front. A Trump presidency, which will bring a lot of different aspects with it. I think, again, I don't want this to be a political debate, but I think he's as bad as he sounds, and as risky as people think he can bring a lot of risk to the markets and all of that. In the end, I think he's very pragmatic, and he's a deal maker. So he speaks a big talk. Is he ever really going to build the wall? I don't know. I mean, a lot of the things he says are just basically to get on the front line, free advertising. Here's my name, and it's all about name recognition when it comes to the primary election cycle. So it's really hard to tell this early in the game, but one is going to be more of a status quo type of presidency, and one can potentially bring on a lot more uncertainty and volatility.
Very diplomatic answer. Yeah, thank you very much for that. Okay, so with that, if there are no other questions, I think we're going to finish up at about half an hour on the dot. I would remind you just to take a look at the disclosures on your screen now, and compliance will be happy with me if I leave it up there for a moment longer. Feel free to pause it, peruse it at your leisure. As a reminder, this webinar is being recorded, so we'll distribute a copy, a slightly edited version of it to you following the end of the presentation today. Let's go ahead and wrap it up. Thank everybody for your time. I want to remind you to visit AzzadFunds.com, where you can download and read a copy of the prospectus for the Azzad Funds. The prospectus, of course, contains more information about the fund's risks, expenses, and investment strategy. While there, I'll remind you of this again. You can also sign up to receive our monthly e-newsletter to get more information about not just the Azzad Wise Capital Fund, but all of our products and services here at Azzad. Finally, be sure to like us on Facebook, facebook.com/Azzad Funds, and follow us on Twitter, @Azzad Funds is the handle. As I mentioned, the recorded version of this presentation is going to be sent to the attendees as well as those who missed it. We're also going to post it on our YouTube channel, youtube.com/Azzad Funds. The next few days, you'll be seeing that, so be sure to check it out. As long as we're here and everyone's still on board, let me again thank you for your time. We'll wrap it up here. Gentlemen at Federated, appreciate it. Always enlightening.
Thank you. Thank you all.
Todd, thanks for being here as well. Yeah, thank you.